Okay, good afternoon, everybody. Today we will start a new chapter, institutional legal framework for public financial management. So, institutional legal framework. I think in the last class we have discussed institutional framework. Today our focus on legal framework. So, therefore, today's subject is legal framework. Upon completion of this subject, you should be able to explain a public financial management framework laid down in the Constitution and describe, interpret, and evaluate constitutional provisions related to public financial management. So, in the previous chapter, explains so what is the institutional arrangement. Institutional arrangement mean like this. So at the top here we have at the top we have here president and parliament, and then cabinet, and then Ministry of Finance, and then under Ministry of Finance there are line ministry and department and so on, and also to monitor. So another group of commissions here, COP and COPA. So this is what this is similar to what you have studied in organizational structure. So like that, the organizational structure we have discussed under institutional framework. Institutional framework similar to organizational structure, hierarchy. Today what we are going to discuss is a legal framework. So where the Minister of Finance taken the power to control public fund, and where the cabinet, what are the authorities, what are the responsibilities, so that sort of things will be discussed in a legal framework. Here, upon completion of this subject, you should be able to explain a public financial management framework. This is kind of what in management arrangements. So how the power has been delegated. Describe, interpret, and evaluate constitutional arrangement. We have Constitution. It was established in 1978 of Socialist Republic of Sri Lanka. It has 20 amendments related to public financial management. We are not discuss everything in everything in our constitution, but our focus on the constitutional provisions related to public financial management. We are not discuss everything. Here this section discuss the legal sources from which public sector managers are getting guidance and instructions on public finance management. So we have already discussed the Ministry of Finance. The Minister of Finance have the authority to control public fund. He is the custodian of public fund. He is responsible to propose the draft, present the national budget. He has the power to allocate money to other ministries, departments, institutions. Who has given this power to the Minister of Finance? What are the rights? So what is the guiding manual to guide the Minister of Finance? So that sort of things covered under the legal framework. So this section discusses the legal sources from which public sector managers, here public sector managers, executors, public, especially they are mentioning concerning about Minister of Finance and cabinet ministries, chief accounting officers and accounting officers. So those are the public sector financial manager, public sector managers. The regulatory framework of public financial management consists of parliamentary legislation and other regulations pertaining to the management, accounting and auditing of public finance. So in the constitution it clearly says the parliament has the power to manage public fund. The parliament has delegates its authority to the Minister of Finance. So therefore the Minister of Finance is accountable and responsible to the parliament. He is answerable to the parliament. They seek to provide broader and specific guidelines for managing public revenue, spending and accountability. So the legal framework it gives guideline in two ways. A general guideline, it gives in broad way, as well as specific guideline. So both kind of guidelines are provided to the public fund managers, public sector managers, especially the ruling party. Very specifically the authorities are officials coming under the Ministry of Finance. Here we have 5 components, legal framework components. The main source of law for public financial management are constitution. It is very important, constitution. Second, organic budget law. Third, annual budget law. Sometime we call it Appropriation Act. Once the budget voted in the parliament and that budget speech is called Appropriation Act. And supplementary budget and enabling legislations and financial regulation and other instructions. First we look at financial framework, especially the constitution. Here constitution, everybody of us know what our constitution is. So the organic and the fundamental law of the nation or state. The constitution is the organic, that is the basic, right? That is the backbone of the country's political framework. All laws, any bills, so whatever the things with regard to the politics or the law, it should come from the constitution. No laws or no any bill can violate the constitution. So constitution is the fundamental thing. So the constitution is the organic and fundamental law of the nation or a state. It is supreme law of a state. It's a supreme law of a country, and thereby the law of the laws, king of the king, like law of the laws. So whatever the law in practice in our country, which law is in line with those all laws, all bills should align with the constitution. So it is written in Sri Lanka, though in some countries it is unwritten. In our country we have a written constitution. What's the number? 1978. 1978. Socialist Republic of Sri Lanka, Democratic Socialist Republic of Sri Lanka. We have constitution. It's written. But in some countries there is no constitutions in written format. For example, in UK does not have their constitution. They are following their customs, their traditions, the code laws, their practices are considered constitutions. So there is no written constitution in United Kingdom. So the constitution establishes the character and the consumption of the government and lays the basic principle on which the country should be governed. So based on the constitution, the country should be ruled. Who has given more power to the president? Why we call our president an executive president, executive power? In our country, in Sri Lanka, the president has supreme power. He has executive power. But in India, the prime minister has more power, not the president of India. Why? Why this kind of differences? Why? Because of the constitution. The constitution gives more power to the president in our country. Who decides the number of the number in the parliament? How many MPs? 225. Who has defined? Who has defined the maximum number of ministries? Who has defined the power of cabinet? So this kind of basic things, the fundamental things, are explained in the constitution. So therefore, no law can violate the constitution. So if they want to change anything, they want to make some amendments. Now in our country, how many amendments of our constitution? How many amendments? How many amendments made in our constitution? 20. No, the previous government has the 19th amendment. So in the 19th amendment, the power of presidents little bit reduced. Again, the 20th amendments give more power to the president. The president can arrest anyone else without any court inquiry for a certain period of time. So the constitution, the 20th amendment has power. It's more power. It defines the power, functions, duties of various branches of government. It defines. So who defines what are the powers of the president? The power of prime minister, power of Supreme Court, power of Attorney General, power of Auditor General. So it's very clearly defined in the constitution. The constitution gives the power. Constitution explains the functions and duties of various branches of government. Sri Lankan Republican Constitution of 1978 with its 20 amendments to it is the supreme law of the state of Sri Lanka. The constitution deals in general with broadest principle of public finance. Right? So the constitution gives guideline in a broader level, not a specific level. Right? So the constitution gives the power Ministry of Finance. So what are the power? What are the power of cabinet? So this kind of things you can find in the constitution, but it is not detailed one. If you want get more detail function duties, you have to refer financial regulation and circulars issued by the Ministry of Finance and other circulars. For example, National Public Procurement Commission. They are the National Procurement Commission prepare procurement manual, public procurement manual. So to anything, if the government organization wanted to purchase any items from external parties, or if the government wanted to construct a new building, so what they say is, so they have to follow a detailed guidelines which is stated in National Procurement Guideline. So that guideline is a detailed one, but constitution offers a broadest principles, broadest guideline. Here the constitution deals in general with broadest principle of public finance, covering, for example, the requirement that all public funds be paid into designated account. Like here, the constitution tells that require that all public fund, all public money, all public revenues be paid into a designated account, and this fund can be spent only under the authority of the legislative. Here the parliament. Here legislative mean what? The parliament. So wherever the government can raise money in the way of tax, in the way of penalties, in the way of debt or donation, so whatsoever the money should be deposited a designated account, normally we call as consolidated fund. So in traditional term we call it treasury, right? Treasury. So all the public fund, public money should be paid into designated account, right? Designated account. So who has the power to withdraw money from this consolidated fund? The authority of the legislative. Mean what? The parliament. Parliament has the authority. So how parliament allocate money? So normally the Minister of Finance present budget in the parliament, and in the budget they have the Minister of Finance detail explained to which ministry will get how much amount of money. So that should be approved in the parliament. So once the parliament approved, the Minister of Finance can issue warrant to withdraw money from that consolidated fund. So the ultimate power to withdraw money in the hand of the parliament, the legislature. The financial regulations between the national and subnational level of government. Financial relation between the national and subnational level. We can find central government, provincial government, and local government. In that way, so different sub-level of government, and in another way, parliament, cabinet, ministries, department, and institutions. So it explains how what's the relation between the national and subnational level of government. The distribution of power in budgeting between executives and the legislative. Now in the parliament there are two parties, ruling party and opposition party. Here ruling party, here opposition party. The parliament consists of both parties. Here the executive parties, the ruling party Actually, they are executing, they are implementing the government policy. And the constitution here, so when if there is no this kind of provision to get approval from the parliament for budget, so what will happen? Executive people consist of what? Minister of Finance and line ministries and cabinet of ministers. So they allocate money, they spend the public fund according to their wish. Sometimes there's a chances to abuse the money, but the constitution clearly says the budget should be approved in the parliament. So therefore opposition parties get the opportunity to interfere in the fund allocation. So therefore it gives the constitution balance the power between the executives, the government ruling party, and the opposition party, the parliament. So the constitution distribute power in budgeting between executives and the legislative. When they are not stated in the constitution, these key principles should be dealt with an organic budget law. So in some countries, this kind of matters not discussed in, not disclosed in the constitution. Right? They are not specifically not stated in the constitution. For that, so these main principles should be dealt in organic budget law. In our country, we don't have organic budget law. For other act, for the political, the government, we have constitution. So the constitution explains how the country should be governed, how the country should be ruled. Likewise, there's another law like constitution. It's called organic budget law. It explains how the budget should be prepared, how the funds should be allocated, how the public funds should be managed. This kind of things is written separately. So that's called organic budget. From this organic budget, every year the Minister of Finance, or according to their national arrangements of the particular country, prepare and present the budget. So they can't violate the organic budget. So in our country, we don't have that kind of organic budget law. So we have annual budget law. Every year it has changed. So that's why in our country we don't have a proper economic policy. So when you look at India, there are two parties, BJP and Congress. So when BJP in the power, they propose economic policy. So next time the new government will come to the power, Congress. What they do is they are not change the government policy. They are not change the economic policy. So what they do, they are implementing the same policy. Right? If they want, they will improve the policy. They not change the policy. But some countries, what they do, say UNP come to the power, they introduce one economic policy, and once the ruling period ends, the new party may come, PA or whatever the party may come, and they totally change the policy, economic policy, and they do something, and the next time another government will come to the power, and again they change, and also it is not similar to this one. So for example, the UNP proposes one economic policy in 2000, they come to the power again 2005, so 15, but again there's a new policy. So this is why our government does not shine in the economic development. So we are now in crisis. So it's sad fact that our country does not have a concrete economic policy, macroeconomic policy. Not at all, but in certain ways. Chapter 17 of the Constitution of Domestic Socialist Republic of Sri Lanka, it's existing constitution. So article number 148 to 154 consist the broader principle on public finance. So it's start from 148. Let's talk about public fund management. The full control over public finance lies with the Parliament. Full control, not in the hand of the Minister of Finance. The Constitution says full control over the public finance lies with the Parliament. That's why even though the Minister of Finance prepare the budget, he should take approval from the Parliament. 149, what it says: all government revenue flow to the consolidated fund. All the money should be paid into the consolidated fund, we call treasury. All the revenue should be deposited in the consolidated fund. 150, warrant mean what? All the public money deposited in the consolidated fund. So how do we withdraw money from the consolidated fund? By the way of warrant, like arrest warrant. They want the Minister of Finance issue warrant to withdraw money or allocate money to the line ministries. So warrant under the hand of the Minister of Finance. Minister of Finance write the warrant. He has the power to write warrant. So based on what he write the warrant? Based on their budget. Based on the budget, Minister of Finance write issue warrant. So warrant under the hand of the Minister of Finance is to be issued for any withdrawal from the consolidated fund. Article 151, Parliament may by law create a contingencies fund for the purpose of providing urgent and unseen expenditure. For example, flood, unexpected flood, or unexpected landslide, so landslip, unexpected landslip, or a tsunami, or pandemic like COVID. So these are the contingencies, unexpected events. Parliament can create contingencies fund. In addition to consolidated fund, the Parliament has the power to create contingencies fund to spend a particular unexpected disaster. 152. No bills, no motions affecting revenue shall be introduced in Parliament except by a minister with the approval of the cabinet. So whatever the law, whatever the taxes, whatever the levies should take approval from the Parliament, which impact the government revenue. So for example, income tax rate, so 28 for example, Now the government wanted to change it at 30%. So this policy change will impact the government revenue. So the particular minister should take approval from the parliament. He propose it in the parliament with the subject to approval of the cabinet. Initially, for example, Minister of Finance present his proposal in the cabinet. Once cabinet is approved, then finally the Minister of Finance present as a bill in the parliament. So without the approval of the parliament, no bills or motion can be implemented. 153. Appointments of Auditor General. Appointment of Auditor General by the President subject to approval of the Constitutional Council. Constitutional Council. So we call here, according to the Constitution, there are many councils. For example, Public Service Commission, Audit Service Commission. So there are commissions. Human Rights Commission, right? So there are commissions. The appointment of Auditor General is normally done by President, His Excellency President. But the President should take an approval from the Constitutional Council. Constitutional Council. 153. A to H. Constitution of the Audit Service Commission vested with the power of the appointment, promotion, transfer, disciplinary control and dismissal of the members belonging to the Sri Lanka State Audit Service. It means we can find employees relevant to audit, relevant to Department of Auditor General. So they are auditors. Normally what they do? They are auditing the public sector organizations. They are auditing ministries, department, institutions. So they are independent auditors. So even the minister does not have power to transfer or to promote or to take disciplinary actions. The appointment, promotion, transfer, disciplinary action, dismissal, no, they don't have power. According to the Constitution, the appointment, promotion, transfer, everything should be done by Sri Lanka Audit Service Commission, Sri Lanka State Audit Service. So they have special power. So what will happen if the minister have the power to promote or to transfer or to dismiss an auditor, government auditor? What will happen? So his power, his independence will be affected. So therefore, according to the Constitution, Sri Lanka State Audit Service only has the power. Duties and functions of Auditor General and report to the Parliament within 10 months. So end of each year, from that 10 months, within 10 months, the Auditor General should submit the report to the Parliament. Let's see the amendments, 30th amendments. So it's a major amendment. Some of the some of the elements of the 30th amendment has been implemented, some are not implemented fully. So 30th amendment to the Constitution's most important amendments. Here, so initially the Provincial Council has established based on the 13th amendment. Appointment of the governor for each provinces. So devolution of power. Finance Commission consisting of governor of Central Bank of Sri Lanka, secretary to the Treasury, and 3 other members to represent 3 major communities appointed by the President on the recommendation of the Constitutional Council. Here, so it has a commission called Finance Commission. As Finance Commission, according to the 13th Amendment, the government should form a Finance Commission. The Finance Commission consists of Governor of the Central Bank, and Secretary to the Treasury, and 3 more members. Those 3 members, these 3 external members, should represent major communities of the country, and these 3 persons should be appointed by the President, subject to the recommendation of the Constitutional Council. So therefore, how many how many members in the Finance Commission? How many members in the Finance Commission? How many? Anyone else? How many members in the Finance Commission? Can you hear me? Can you hear? So there are 5 members.
Yes, sir.
Yeah. How many members? 5. So
5 members.
Yeah, Governor of the Central Bank and Secretary to the Treasury, and 3 members representing 3 major communities. So these 3 members appointed by the President with the recommendation of Constitutional Council. There are 5 members. Now let's see the organic budget law. So like Constitution, some countries have organic budget law. So all the budgets should prepared based on the organic budget law. So like all the bills, all the act, all the laws are prepared based on the Constitution. Like the budget of the country should be prepared based on the organic law. Generally, organic budget law provides the legal base for all key roles and relationship between different actors in fiscal management, and lays down the major principle of budget management and auditing. So in our country, the constitution explains these things. So in some countries, the constitution does not give some guidelines, but for that they are preparing, so they have organic budget law. So it gives the organic budget, explains the roles, the duty, the power, the function, things with regard to the public fund management. In some countries like United States, fiscal management, financial management is framed by several actors covering specific areas instead of one single organic law. So in some countries like United States, so they have different several act. For example, for agriculture, when preparing budget for agriculture sector, so they have some framework, they have some organic law specifically for the agriculture sector. With regard to the defense, when they allocate budget, when they prepare budget for defense ministry, they have the certain organic budget law. So based on that organic budget law, they have to prepare the budget. Here some countries have single organic budget. So US has specific area, the organic budget for specific areas. It's a guideline. The United Kingdom and some other common law countries, including Sri Lanka, have number of financial regulations and accounting guidelines but do not have organic budget law. Country does not have organic budget law. They rely heavily on established administrative practices and procedures of parliament as a basis for budgeting rule. So in our country we have what? We have financial regulations, circulars. By contrast, civil law countries such as France, Germany, Italy have extensively codified their legal framework and their organic budget law. Here, organic budget law, it has three components. First one, general principle. Second, budget formulation. Third one, budget execution and audit. It has three components. So general principle means it's a general guideline. So budget formulation means it gives some guidelines how to draft budget, and budget execution audit means so how to implement the budget, how to report the performance, and independent audit control mechanism. So these are the components of organic budget law. So when you look at here, so general principles, here principle of good budgeting, here fiscal discipline, allocative efficiency, cost effectiveness, concept and definitions, scope of budget should be comprehensive, counting and classification issues, appropriation and case limit, role and responsibility of budget institution, relationship with other public finance laws, power of Ministry of Finance to regulate the budget system. So under the general principle, you can find this. And budget formulation, budget timetable, multi-year framework, setting the initial budget, ceiling, spring budget circular, integrated procedure for current and capital expenditure, analysis of budget request, preparation of draft budget law, submission to the parliament, content of the document, rules and supplementary budgets. So these are the guidelines to prepare national budget. And how to execute the budget, how to implement the budget. Here they explain the treasury, cash management function, in cash limit, internal control and internal audit, penalties, procedure for non-compliance, fiscal impact analysis, end of year budget execution report, external audit procedure, management of government debt, fiscal risk and contingent liabilities, fiscal rules for EBF and substantial government. Now in our country we have annual budget law. What is annual budget law? Normally every year November, in the month of November, Minister of Finance present his budget on the parliament, and in the parliament there are so many arguments on the fund allocation, and based on arguments the budget will be revised. Once the budget is voted by the MPs in the parliament, now the budget speech, the budget document become annual budget law. It is called Appropriation Act. It's called appropriation, how to allocate fund. So appropriation. It is the financial plan for the forthcoming year. So in the latest budget 2022, an Appropriation Act is an act of parliament that authorizes the treasury. Here the parliament authorizes the treasury and the government to issue and use fund out of considered fund. As I explained earlier, the control, full control over public fund with the hand of the parliament. In the parliament, and in the parliament, the budget, from the budget, the parliament delegate its power to Minister of Finance and other executive people to withdraw and spend that money. Appropriation Act also appropriates the fund to individual ministries and other government bodies. So all the funds should be deposited into the consolidated fund, and the fund will be distributed to different ministries, like different line ministries, different departments, different finance institutions, government institutions. It generally set out a total appropriation for the financial year. So total allocation of fund for the year. How it will be financed and borrowing limits. So government has expenditure. How to raise fund, where the money can be borrowed. Allocation of different ministries and government bodies. We can find, how the government going to spend this money. Limit for advance account activities, power and procedure to transfer saving, and vary from some limits of appropriations. Sometimes some government institution return the money, savings. So for example, allocated spending 1 million, but actually spend is 70 million, and 30 million will be the saving. It should be returned to the treasury. And some institutions lack of funding, actual allocation is 100 million, but actual spending is 120 million. So there's a variance here. So what to do? So this kind of guidelines is given in the budget. The objective of Appropriation Act would be given in the Act. Provide the services, public expenditure for financial year. And so it's an objective, right? Objective of Appropriation Act. Sometimes we may write it objective of budget, objective of annual budget, annual national budget. To provide services to the public. To authorize raising loan inside or outside Sri Lanka for the purpose of such services. So government need money to provide service to the government. So where they can get the revenue. So in the way of tax income or in the way of loan inside or outside the country. To make financial provision in respect of certain activities of the government during that financial year. To enable the payment by way of advances out of the consolidated fund or any other fund or monies or at the disposal of the government, or money required during that fiscal financial year expenditure on such activities. To provide for the refund of such monies to consolidated fund, and to make provision for matter connected therewith or incidental thereto. And enabling legislations, so some special act give power, right? For example, there are some special act. Universities are established based on the Universities Act, and People's Bank established in a separate act. Ceylon Petroleum Corporation established in a separate act. Here this is called enabling act. Companies law is enabling act, enabling legislations. So enabling act is a piece of legislation through which a public entity is established. For example, how established BOC, Sri Lanka Telecom. Sri Lankan Airways. So this kind of establishment, this kind of organizations are established by the way of specific law, specific act. Enabling act often establish government agencies to carry out specific government policies in a modern nation. So how the central bank has been established? Who gave the power to the central bank? It generally provides for power, duties, functions, objectives, scope, management, finance, etc. of such establishment. Such entities shall operate within the limit of power so granted. So the power clearly explained in the Appropriate Act. Here, the enabling legislation generally provides the following aspect: establishments. How to establish a particular institute. For example, if the government wanted to establish new university, so we have Act, Universities Act. So based on that, they have to establish universities. Objectives, power and functions. Authorized capital, funding arrangement, borrowing power, governance, appointment, removal of board of directors, responsibility of directors, accounting and audit, recruitment of personnel, employees, dissolution, everything you can find in their act. The following are few examples of enabling act in Sri Lanka. You can find Provincial Council Act, where you can find what are the powers, what are the duties, where the provincial council can collect money, revenue, what are the taxes they can leave, who is governed, who is the governor, what's the power, so how long he can be in the power. So that kind of things you can find. Industrial Corporation Act, State Trading Corporation Act, STC, State Trading Corporation Act, Agriculture Corporation Act, Universities Act. So other status, other statutes, for example, circulars, time to time government will issue circulars, and financial regulations. All these are the statutes. The following statutes also govern the management of public enterprises. Part 2 of the Finance Act number 38 of 1971 related to the financial control of public corporations. So this act is to be repealed by proposed Financial Act, which would provide the regulatory framework for public sector financial management, including public enterprises. So conversion of public corporation or government-owned business undertaking into public companies. It is done based on 23/1987. Companies Act number 17 of 1982, under which government-owned companies are incorporated. Now it has been revised, number 7 of 2007. Enterprise Reform Commission Act. And we have financial regulations. Financial regulation is issued under the hand of Minister of Finance. Financial regulation provides a regulatory framework within which the government financial transactions are carried out. So in private sector, normally we use LKS, accounting standard, but in private sector they have to follow financial regulations. FR intend to ensure orderly financial transaction in public sector institution. The present FR 1992 supersede 1966 financial regulation. So 1966 is the first edition and latest edition is 1992. And financial regulations are binding on ministers, department, statutory bodies and all other state employees. So they are bounded under the FR with regard to the financial transactions. In case Government corporations, this FR will apply unless they have adopt their own comprehensive financial regulations, rules and procedure. So some corporations or some private government owned companies can develop their own financial regulations. They can adopt based on their requirement. If they do so, they can follow their own one. For example, Sri Lanka Telecom, so it's a public owned company, so they are not following financial regulations, so they have adapted, they have revised according to their setting. Financial regulation general scope. So financial regulation mainly deals with regulation on the following aspect: estimate of expenditure and revenue, authorities and expenditure, refund and write-off, financial management and accountability, receipt and payments, custody of public money, interest and bank accounts, accounting and book of accounts, advance account, kacheri account, court accounts, foreign aid, printing and publication, supplies, work and services. So these are the things normally covered by the financial regulations. So other regulations we can find treasury circulars. Time to time the treasury issues circulars. Ministry directives. So line ministries give some instructions. Procurement guideline, national procurement guideline. Manual of procedure and establishment code, normally we call is E-code. E-code is a HRM guide, human resource guide in the public sector institutions. So if you want more knowledge on that, you can read this recommended book. Any questions? Any questions? If you have any questions, you can